Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for January 11th, 2010. This is Patrick Ceresna. First off, I want to take a look at the S&P 500 using that SPDR exchange traded fund symbol SPY. For a while, we've been looking for a market top to develop up around that 111, 112 zone. We were talking about last week that we would need a technical breakdown below 108 and 109 in that blue zone in order for the market to even begin to show any signs of an official reversal. Instead, we obviously had a technical breakout heading right up toward that 115, 116 zone. That is another measured move on the upside. So we'll be watching as the S&P gets up into there, whether or not it finds that overhead resistance. Nonetheless, if in fact we have no reversal early next week, we can't rule out the possibility even that over the next 2-3 weeks we make a push even up into the 120 area on the upside. In the bigger picture, we still believe that the first quarter of the year will bring some sort of a market correction in, but it may actually come off of higher levels. So we're going to be watching where this market finds some sort of overhead resistance and whether we see a topping formation develop up there or not. In the short term, so long as you're swing trading, any pullbacks that find support can be traded on the upside for swings. But if we, for whatever reason, get back down below 111, 112, at that point we can start visiting the idea that a correction is going to kick in. But for now, we're just going to go with the flow. Next here, I want to take a look at the ISE US Regional Banks Index, which is a symbol JLO. And more or less last week, we were suggesting that with that rejection in December at the 20.5 to 21 area, and then rolling over the week before, we were looking for them to come back and retest support lines. Subsequently, this week, they came in with a strong breakout. And once we broke above the $20 overhead resistance, it thrust higher right up through the focal point and actually to new highs. This is a bullish breakout, and at this point we cannot have any bearish outlook on regional banks on the short term. At this juncture, we don't want to chase the initial break. There is some sort of a consolidation that may occur, but so long as anything that consolidates stays above the 2050 to 21 area, consolidations more than likely will be able to be bought for a trade up into the 22.5 to 23 zone on the upside. A bigger picture measure move even pushes up to $24. So at this point, there is nothing directly bearish. The only way that we would have any bearish outlook on the regional banks would be if we saw an immediate sell-off that brought us right back down to the 19.5 to 20 area. That would mean that this whole breakout was false. But so long as consolidations are contained, then it is a bullish outlook. Next here, I want to take a look at the ISE Syndex, which is the symbol SIN. This is an index of all the casino, tobacco, and distiller companies. We as well were bouncing along that support line toward the 90-100 zone. We were looking for last week for it to come back and retest those support lines, but we had a bullish reversal candle come in first thing Monday morning, breaking any downwards trend line that's been in place. At this point, if so long as all selling is contained, let's say to the 104 to 106 zone on any backfilling moves, then you can certainly catch bullish thrusts higher, trading even up into that 112 to 114 zone. So at this point, again, so long as any selling is contained, then bullish breakouts can be taken. Next here, I want to take a look at the ISE Home Builders Index, which is the symbol RUF, and we had a move on the upside into that 9.5 to 975 area. We were suggesting that that's the retracement zone, that if in fact that was only a retracement, that it was going to reverse and break down off of that level. Once we had that bullish pivot break that occurred on Tuesday, on the upside, it immediately brought in buyers and that thrust the market all the way back up to some of the high zones up in the 1050 to 1075 zone. This is a short-term overhead resistance level, but I would not suggest that that's where it's going to reverse off of, so long as any of the selling is contained, let's say above the $10 area on any little pullbacks, then certainly they can reverse and thrust all the way up to the 1125 to 1150 area. So it certainly at this moment is not bearish. Next here, I want to take a look at the ISE Natural Gas Index, which is a symbol FUM. And last week we were saying that we were doing a bullish test of the 112 to 114 and suggesting that so long as that selling was all contained to that 101 to 105 zone, which is the retracement zone, that it certainly can roll back up and make a bullish move. That came immediately on Monday as we had a very strong reversal candle that ended right in the 112 to 114 zone. We more or less continue to contain ourselves right in that focal point, but at this juncture, so long as there's any bullish break, let's say above the 115 area, we certainly have lots of room to make a move all the way up into the 123 to 125 zone. So overall, there's some bullish price action here. Again, I want to see at least one good confirmation day that breaks solidly above 115, and then the window will open up for a continuation on the upside here. Finally, we want to take a look at the mini FTSE 100 index, which is the symbol UKX. And the FTSE here is certainly continued to advance higher. We were suggesting the completed measured move on the upside last week was up in this 550 to 560 zone. We've now put in that 560 to 565 focal point on the upside as our target for our overhead resistance. That sort of lines up with the 115, 116 on the S&P spiders. So we're going to be watching how that support resistance level occurs there. That doesn't mean that a major market top will occur there. It may just end up being a place where the market takes a breather before making further advances. But nonetheless, we are looking for overhead resistance up in these higher zones. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.